Hi, this is Anthony, parent of IRS Medic. In this video, I'm going to try to answer this question. Does the IRS have the legal authority to assess FBAR penalties? The first place I'm going to go is to the regulations. And here's the regulation that claims to justify the report of foreign financial accounts. Okay. In general, each United States person having a financial interest in or signatory or other authority over a bank, securities, or other financial account in a foreign country shall report such relationship to the Commissioner of Internal Revenue for each year which such relationship exists, and shall provide such information as shall be specified in reporting form prescribed under 31 U.S.C. 5314 to be filed by such persons. The form prescribed under sections 5314 is the report of foreign bank and financial accounts TD-F 90-22.1 or any successor form. See paragraphs G1 and G2 of this section for a special rule for persons with financial interest 24 or more accounts or signatory or other authority over 25 or more accounts. So there's a regulation. So let's go to the actual law. Let's go to 5314. So here it is, 5314. Now, the first thing I notice, it doesn't really seem to say that. It doesn't say reports of foreign financial accounts. It doesn't say anything about that. It says there's foreign. It says records and reports on foreign financial agency transactions. Okay. Well, now maybe the law just means a foreign financial agency is a term that includes a report of a bank account. Maybe that's the way it is. So that's what I'm going to look for, something like that. So let's start reading the actual text of this, though. Let's see what it actually says. Regulations claim, hey, this is the form. There is a FBAR prescribed by this law. Okay, that's what the regulations claim. So here we go. Considering the need to avoid impeding or controlling the export or import of monetary instruments and the need to avoid burdening unreasonably a person making a transaction with a foreign financial agency, the Secretary of Treasury shall require a resident or citizen of the United States or a person doing business in the United States to keep records, file reports, or keep records and file reports when the resident, citizen, or person makes a transaction or maintains a relation for any person with a foreign financial agency. The records and reports shall contain the following information in a way and to the extent the Secretary prescribes: the identity and address of participants in a transaction or relationship, the legal capacity in which the participant is acting, the identity of the real parties in interest, description of the transaction. Well, I think one thing there is, well, that's funny. This is about transactions. And they're saying the FBAR is about bank accounts, but this is about transactions. And let's just go up further. At first blush, you might just think, yeah, that seems about right. This regulation lines up with this. But as we go deeper and actually analyze what the words mean, I think the wheels fall off the wagon here a little bit here. So first thing is this law, the FBAR law, is actually meant to make life easier. That's what is actually there. And it's related with the import and export of monetary instruments. So my first question is, well, how does a bank account get imported or exported? Now, you might be able to import or export what's in the bank account, but the bank account itself can't be exported or imported. It is where it is. So that's the first thing. Okay, so now what's this monetary instrument? Is a bank account a monetary instrument? Really wouldn't make sense to me because, again, you can't import a monetary instrument. Well, wouldn't you know it, the law actually defines what a monetary instrument is. Monetary instrument means a United States coins or currency. Okay, that doesn't apply. B, as the Secretary may prescribe by regulation, coins and currency of a foreign country, travelers or checks, bearer negotiable instruments, bearer investment securities, bearer securities, stock on which title is passed on delivery, or similar material. Okay. By the way, everything we've talked about so far, these are all things that can be imported and exported. C, as the Secretary of Treasury shall provide by regulation for purposes of 5316 and 5331's checks, drafts, notes, money orders, and other similar instruments which are drawn on by a foreign financial institution and are not in bearer form. And D, this, as the Secretary shall provide by regulation value that substitutes for any monetary instrument described in paragraph A, B, or C. So whatever it is, a monetary instrument is something that can move. It's not, we know that. A monetary instrument is something that has value and can be transported. So let's go back here. So each foreign financial, so here's the regulation: report on financial accounts. Okay, again, it doesn't say financial law, doesn't say financial accounts. It says reports on foreign financial agency transactions involving monetary instruments, which a bank account most definitely is not. Let's go continue down. So, and to avoid needing the burden of reasonably a person making a transaction with a foreign financial agency. Now that's interesting. It doesn't say foreign financial institution, it says foreign financial agency. Well, what is a financial agency? Well, the law defines that as well. 31 U.S.C. 5312A1 defines a financial agency. It means a person acting for a person. So agency means a person acting as a financial institution. Now, the roles may be somebody who's acting as a financial institution, bailee, depository trustee, or agent, or acting in a similar related way to money, credit, securities, gold, transaction and money, credit, securities or gold, or service provided with respect to money, securities, futures, precious metals, stones and jewels, or value that substitutes for currency. So these are financial agent is a person who's helping you with the transaction involving a monetary instrument. Okay. Now, maybe there's just a broad reading that a financial agency means financial institution. Well, wouldn't you know it? The law goes to define that. And look at this. Look at what's going to happen here. So we have the definition of foreign financial agency. We just discussed that. But right below it, financial institution means a bank, meaning financial agent, financial institution cannot be synonyms as they're both specifically and distinctly identified. Financial agency is a person acting for a person. Financial institution means bank. Now, there's more relationships that do apply. And it's one of the most more interesting ones: pawnbroker, travel agents, person acting for another person, or travel agency. That can also be a foreign financial institution. So an agent can be a foreign financial institution, but not all foreign financial institutions are people. So maybe there's a way here. And this is where I would say the government has the best catch-all right here. I'm going to show you what is most helpful for them right here. This is the government's best argument right here in subsection Y. Any business or agency which engages in an activity which the Secretary of Treasury determines by regulation to be an activity which is similar to, related to, or a substitute for any activity in which any business described in this paragraph is authorized to engage. So any business that engages in the activity which the Secretary of Treasury is. Okay, so if you're acting as a bank, then you're a bank, is basically what they're going to say. If you understand what that is, if you're acting as a bank, we could kind of make regulations to say you're a foreign financial institution, right? But this is only modifying what a financial institution is. It doesn't modify what a financial agent is. So a financial agent is a person, and a financial institution sometimes, if they're doing the thing that a financial agent is, can also be a financial agent, if that makes sense. We're sort of caught with some problems. We're really caught with some problems because the law starts to make no sense. If we're going to claim that it says records and report for foreign bank accounts, first of all, the law doesn't say that. It says foreign financial agency transactions. And it would make no sense if this was actually reporting a bank. If a foreign financial agent and a foreign bank were the same thing, this thing makes no sense, because this is all about participants in a transaction. A bank account is not a transaction. It's a bank account. A legal capacity, which the participant is acting. Okay, there's going to be, that's the same. It doesn't really matter. The identities of the real parties in interest. Well, that's sort of weird. We have that. If we're involved in a bank, then who's the real party of a bank? Who's the real party of a bank? And then it's description of the transaction. Well, what's the transaction? Is earning interest the transaction? That's basically what you're trying to claim. Well, what if your bank account doesn't earn any interest? So I think claiming that this is for reporting your foreign bank accounts, it just makes no sense. This law makes no sense. If it's called, if we're looking at reporting monetary instruments for which you use another person in the world, then the law makes complete sense. The law makes complete sense. Now we have some additional. We just want to discuss a few more things about 5314. Secretary may prescribe reasonable classification of person exempt, foreign countries that exempt, the magnitude of transactions over a certain amount. You only have to report over a certain amount, certain kinds that would be exempt, and other matters the Secretary considers necessary to carry out this section or regulation under section. Now, I guess, is the Secretary defining a foreign financial agents as a foreign bank account? Is that necessary? Well, I would think that would violate the Constitution, as this law doesn't give the power that it's claimed. And this is what I would say here. Here's C. This is really interesting. The last part of 5314 C. A person shall be required to disclose a record required to be kept under this section under a regulation under this section only as required by law. Well, this is the law. This right here is the law. So does the law say you have to report your foreign bank accounts? No, it says you have to report the import and export of monetary instruments that involve a foreign financial agency. Now, what can I show you to prove my theory just might be right? What can I show you to prove? Is there anything that came out recently that might help me prove my point? That is, do you think the Treasury knows they're wearing no clothes? Do you think Treasury knows they have a naked power grab? Well, wouldn't you know it? Recently, this is something here. This is something that just came up, and I saw this coming through. And I know exactly where they're going. So this is a bill that's proposed, the Tax Simplification for Americans Abroad Act. I want to thank my friends Keith Redmond and John Richardson for their help in getting this out there in this news. This is just out. So this is a new law that's proposed by the Democrats. And let's just go to page 5 to see what it says. If it says anything about maybe amending 5314, that would be something, right? If there was an amendment to fix 5314 to change it to what the regulations want it to be, wouldn't that be something? That could certainly be something. Let's go to page 5, just see if there's anything related. Whoa, hang on a second there. There it is. Wow. So this law, this act wants to change 5314 of Title 31. Wouldn't you know it? Wow, that's really amazing. And now they're changing specified foreign financial assets. Wait a second. Are you trying to change the definition of specified foreign financial assets to something of section 6038D of the 2211 in the Internal Revenue Code of 1986? Well, yeah, they're looking to amend it. For some reason, they happen to know the law's not there. And so here's their fix. And here is the law that it's changing. Or here's what they want to change it to. This is changing what is required on an FBAR to what's required on a FACA. Isn't that interesting? They want to change it. Now, this is what I'm going to predict here, because many people think that this Democrat bill has no chance of passing, and I think they're looking at it totally wrong. First of all, because they're going to fix their FBAR law problem, because the law isn't there. Because they're fixing that, what I suspect is going to happen is that the Congressional Budget Office, and this is really a penalty bonanza. This is penalty fest. That's what this law is going to do. Penalties will be more easily assessed against a whole new group of people. So while FBAR penalties have been hammering people left and right, this is only going to make it more. So the Congressional Budget Office, and this is just my bold prediction on this, will likely score this Simplification Act, this Tax Simplification Act, as something that will raise revenue. That it will actually, this will help the United States government increase its revenue. Now, whether or not that actually happens doesn't matter. As long as they can score it as a revenue gainer, that goes into a pile, because what that means is the next spending bill that comes along, where we're spending money overseas on proxy wars or whatever we're doing, that's so much fun. We need to offset that, because we want to have revenue neutral spending, which is only created deficit after deficit after deficit. This is called pay-go budgeting. And the way it works is you have your spending bill, and then you have your phony savings or other countermeasures that will claim that will be revenue neutral. Those savings never happen, but the spending always does. That's sort of the fraud of pay-go budgeting. So what's going to happen is that there's going to be a spending bill, and the Democrats and Republicans will come together, and it could even be it could be a Republican spending bill. They could be the ones proposing it in the House. And then they're going to go around and say, okay, well, how are we going to pay for this? And then on the list is like, oh, we have a savings right here. All you need to do, Republicans, is sign on to this law, and then you'll have free money and your spending will be revenue neutral. Therefore, and when will this happen? Probably in a year, probably in the year. And I mean, this is very well thought out. I highly doubt that this was Mr. Byers' idea. I believe somebody whispered it into his ear and magically handed him this bill that was going to simplify tax savings for Americans abroad. So, concluding that, do you see when we look at 1010-350 reports on foreign financial accounts, that 31 U.S.C. doesn't say that. It doesn't say that. It's foreign financial agency transactions involving monetary instruments, which are things that move in transit that specifically can't be foreign financial accounts. Bolstering my argument is the fact that we have a proposed cure to the government's problem of 5314. So I want to know your thoughts. Do you see other problems with the FBAR, or do you see a problem with my thinking? Please, I don't want to be spreading misconceptions out there. I'm here to illuminate and illustrate things. And so if I'm say there's something I'm missing, please let me know. I'm out here to help everybody. So look forward to this. Now, oh, here's one thing. Why? How could this possibly exist? Might be your question. How could we have it where this law to impose the worst types of penalties on people who might not even owe taxes, who just for the crime of owing a foreign bank account? How could it be that the Supreme Court hasn't seen this and that the legal industry hasn't outraged and accountants and lawyers haven't said, how dare you impose these penalties on our clients? You don't even have the justification to do so. Well, there I would say here's what you need to understand about our system of government. First of all, in the 1930s, our non-wartime income tax was first imposed in 1913, and it was a tax on everybody on worldwide income, as we were later to find out in 1924. Curious thing though, federal judges exempted themselves from taxation. They exempted themselves because they didn't want to pay it. It wasn't until the 1930s where they were basically shamed into allowing themselves to be subjected to the income tax. So judges themselves, we could say, federal judges have a bias. They have a pretty big bias about protecting themselves and protecting their own turf. One thing you need to understand about Washington, D.C. is it is united. It is strongly united against the American people. The people in Washington, D.C. represent Washington, D.C. And the last thing they want to do is give up power. This is incredible power that allows them to rule over people and ruin them and make them jump through hoops to avoid getting on the wrong side. So I don't expect Washington, D.C. to provide relief from Washington, D.C. They are the team. Only with extreme humiliation will they make a change. That is what's required. They need extreme humiliation. Number two, the answer, why hasn't the tax industry been in uproar about how are you penalizing our clients for things they didn't do wrong? Because here's the secret. They want this too. They want it to. FBAR penalties make sure their clients pay them more money each year and handle this because the IRS is out of control. They're going to face more massive penalties. So you better pay them a lot. You better pay them a lot. It's agitation. This law is agitation for them. By the way, if you look at a lot of these large firms, guess what they're doing every day, all the time? They're lobbying for more and more complicated laws so that you have more of a reason to hire them. Now, in full disclosure, I have handled a lot of FBAR cases, a lot of volunteer disclosures. So I too am part of that massive tax regime. However, I have other things I could be doing other than this. I have other things I want to get to. So this is not the only thing I want to do, and it's just not the right way to make money. It's not the right way to make money by scaring people on a lie. That is simply not the way to make money. I'm here. I want to offer clarity and hopefully hope for some of you out there who are facing FBAR penalties, and maybe some of you legal minds out there. Hopefully this is a great base to start from, to start your research. And there's more things going on here, how this all came into being. So I want to share with all of you my actual email address. Here it is. Okay. If you are working on a case right now and you're working on a case and you have some ideas, email me. I want to hear from you. This is really one of the most interesting things for me, because I don't have a foreign bank account and I'm not subject to FBAR penalties. It's very interesting for me, but also I think it's a great use of my skills that God gave me to look out for others who are getting hammered by something that isn't even there. I mean, that's what's crazy about this, right? We have an Eighth Amendment that is supposed to protect us from unreasonable and fines and punishments, right? And the Supreme Court looks right past it, ignores it. And really, this is what happens is that the regulation becomes more important than the law. And so, folks, you know what it's going to take? It's going to take extreme humiliation to get the Supreme Court to see this. It's going to take extreme humiliation to get any district court to see this. But it is possible because I think I proved there is no law that requires you to file an FBAR. Thus, there can be no FBAR penalties, of which I believe it deserves its own video on how the FBAR penalties aren't really, even if we assume that it doesn't make sense. The way the penalty structure is, it doesn't make sense. It would make sense if the law means what it says, that monetary instruments moving in and out of commerce are what are required, not a foreign financial bank account overseas, which would be actually a pretty interesting interpretation of the Commerce Clause, right? How does Congress have the ability to regulate commerce overseas? Well, what they say is, well, we could regulate the person, and that's their way around that. But it's still a big, that's now everything can be regulated worldwide, and that's sort of because the person is regulated, everything worldwide is regulated. The person touches. Well, I think that goes beyond what the Commerce Clause allows. But again, this is the federal government going to decide the bounds of the federal government's power. So only in cases of extreme humiliation will they actually fine the people. This is Anthony Parent of IRS Medic. I hope you find this video incredibly helpful. I really do. I do want you to subscribe to this channel if you can. And here's the thing, turn on those notifications because we go live all the time. New stories are popping up all the time. And we want to make sure that people have an ability to comment. We know there's not a lot of outlets for people facing this terror. And this is one such outlet where you could share your story, tell us what's going on, what your IRS agents are talking about. I talk to IRS appeals agents around the country. I could tell you what's going on. It's incredibly awful. There's a national FBAR penalty coordinator who's taking the independence away from the IRS Office of Appeals, all for this law that doesn't exist. This is Anthony Parent of IRS Medic. Thanks for watching.